Last week, Troy Sutton explained how you can make money by renting your owned property. This week, he continues this series and helps you know if your home will make money or lose it.
Is my home an asset or a liability? Well, let's look at it from the two perspectives that exist. An asset is something that generates income, and if you're living in your home instead of renting it, then it's not generating income. And if it ain't making any money, it's costing you money. Only liabilities cost you money. So from that perspective, your home is a liability. It's a cost. Now the other perspective is the live and sell point of view. A home is an asset if you can sell it later for more than what it costs you to buy it. So maybe, big maybe, your home is an asset. Now, I have clients who've retired and downsized. They sold their big home that they lived in for decades in exchange for a teeny home closer to their grandkids. And then they pocketed the substantial cash difference. I also have a couple of clients who couldn't sell their home for a profit if they tore it down, rebuilt it from scratch. Nobody wants to live where they live. So that, my friends, is what we call a very big liability. Why do I speak about real estate to my clients and to you? Well, because the nature of real estate lends itself to prosperity if done correctly. Think about the characteristics of real estate investing. Not all investments share leverage, income, tax advantages, and appreciation. Now, what the heck is leverage? That, my friends, is when you can use other people's money, like a bank or other investors, to invest. So a little bit of yours and a lot of theirs brings potentially huge returns on your small amount of investment. Let's take an oversimplified example. You buy a home for $250,000 and you put 20% down. That's $50,000. What if the home increases by 10%? It's now worth $275,000 not long after. Do you think you just made 10%? Wrong. You sold the house for $275,000. You paid the bank off at $200,000 and you kept $75,000. That means you invested $50,000 and you got back $25,000. A 10% house appreciation gave you 50% return on your down payment. That, my friends, is the power of leverage. It is one reason why real estate can be so incredibly lucrative. Which reminds me, a guy once said, a mortgage has one down payment and 240 darn payments. The key to successful real estate investing is income. Location is important, but location of the real estate affects the income. It's all about the income. So if you have a property with a mortgage of, say, $1,500 a month and you can rent it for $1,800, then by George, you're making $300 a month and the tenant is paying off the house for you. They are literally building your net worth every single day since the house is appreciating and the mortgage is reducing. That affects your net worth in a positive way. Want to know why real estate tax billionaires don't release their tax records? Because they don't pay income tax. Who wrote the Constitution and the tax code? Lots of landowners. So if you sell your home, the government allows you to keep the first $250,000 tax-free. Did you know that? $500,000 if you're married. Furthermore, the mortgage interest is tax deductible up to certain amounts. And if you own rental property, you can use something called depreciation, which offsets some of your other taxable positive cash flow. In other words, lots of tax-free money can be yours through investing in real estate. Lastly, appreciation. Real estate over the long haul, though imperfect, has been one of the most consistent and reliable investments available. Generally, though, according to the National Association of Realtors, real estate appreciates at around 7% per year. Well, my stock portfolio averages 12% per year, but consider that most real estate is bringing in 6% dividends and is 70 to 80% leveraged, which we already talked about. That means a 6% return with leverage is 20 to 30% for the average real estate investor. There aren't many stocks and bonds that can deliver results like that on a consistent basis. So what's the point? I just want to get you thinking. Go out and do some research. Talk with somebody who knows real estate or has an opportunity to help you invest in real estate if it is appropriate for you. Be aware of the pros and cons, the risks and the rewards, because there's a bunch. Leverage, income, tax advantages, and appreciation are great tools for wealth creation. Remember, by the time you pay for a home in the suburbs, it ain't in the suburbs anymore. Have a good one.
All right, thank you, Troy. If you would like to contact Sutton Financial Group, they are located at 2449 South Willis in Suite 106. You can give them a call at 437-0709 or go to suttonfinancialgroup.com.